Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 19th of May. I'm Daniel Lam, your host for the podcast. Last week, we spoke about how, over these few months, Trump is going to be focusing upon making peace across the globe. This is a key part of his plan to shrink the US budget deficit, because ultimately, he would like to have the possibility to reduce military spendings. A more peaceful world would mean less disruption and more efficiency for the supply chain, and that's going to help offset inflationary effect on the US. And also, this explains why Trump has been trying to broker a ceasefire deal between Russia and Ukraine. Now, how likely is Russia going to accept this ceasefire? Yes is the answer, because the war has been causing much stress in the Russian economy. So to give you some statistics, borrowing exceeded pre-war trend by $710 billion US dollar, which means new debt is at a rise of 31% of the GDP. The National Wealth Fund has shrunk to 144 billion US dollar from 211 billion US dollar over the last 3 years. How are the revenue side of things? Well, about 30% of revenues of Russia come from energy and commodity production. However, the global benchmark crude oil price has dropped from 94 US dollar per barrel in February 2022 to $62 currently in May. And we see supply side expansion, for example, from Saudi Arabia, to keep capping global oil prices. Now, supposedly the Russian budget requires only 41 US dollar per barrel for oil price to break even. But oil and gas revenue is falling behind defense spending, and the discrepancy is worsening this year, as defense spending rises 12% over last year, and yet oil prices has dropped by 26%. Lastly, of course, the Russian central bank had raised interest rates to 21% from 8.5% since February 2022, while imposing capital controls to prevent outflows from hurting the ruble. So this caused worsening inflation, and high interest rate hurt household consumption and business investment. So yes, logically, Russia would be considering accepting the peace deal, especially when Trump may push for heavier sanctions against Russia and tariffs on those countries that do businesses with Russia. Now, if there were to be ceasefire between Russia and Ukraine, this can lead to further normalization and improvement in risk sentiment, particularly in the euro area. And with the fiscal stimulus there, we would be staying bullish in areas such as European financials and industrials. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.